Hi, this is Randy Finney with Right Side of the Chart. This is a closing market wrap for the week ending Friday, November 1st, 2019. That'll be a pretty quick, brief update since we're only going to go over the broad markets here. Most of the activity, or at least lucrative trading ops in recent weeks have been in other asset classes such as natural gas, crude oil, treasury bonds, gold, a lot of ag commodities, coffee, things like that we're focused on. But as far as the broad market goes, today it was an up day, but didn't change anything technically. Most recently, yesterday, we came close to triggering some sell signals, but failed to do so. The levels that I've been watching are the bottom of that gap from last Sunday. It's a week ago. And that's at 80.40. So we came close to that yesterday in NQ and failed to do so. So I thought we might get another thrust down today, but we didn't. In fact, we're still even above the trend line. So we just continue to work our way up within this wedge pattern here. And so the levels to watch for next week are going to be the uptrend line, of course. Now we're a little bit farther away from that, whereas on yesterday, as I said before, we'd have to take out both the trend line and that 80.40 level, and we came down to the zone. It's two lines are together. The gap runs from about 80.40 to 80.50 right there, these two lines. So now next week we'll see what happens. If we get a breakdown up at higher levels, that may give us a shorting up, or at least for an initial starter short down to that level, and then maybe add on. Until then, there's not any sell signals at all, and we're just walking our way up within this wedge, and of course that can continue for some time. And remember, the upper line is only a divergence line, not really an important trend line. Divergence lines can be changed. Trend lines can be as well, but they tend to be a little more rigid, and that's where you get a sell signal. So if this is the divergence line right now, like I had it there, if we pop up on Monday, then we'll see if we keep these divergences intact. And I can tell you, at least for the time being, they're going to be intact. I'd have to take a pretty big ramp next week. But again, so nothing much to report there, just meandering our way up within the wedge. And let's look at ES, and then we'll get a couple other things and wrap it up. Actually, let me grab another chart here that I already have marked up for ES right there. So here's ES. ES the trend line on ES is not as well defined as NQ. They have parallel trend lines, or not parallel, but a primary and a secondary trend line. And we're back above there. We pierced down below there yesterday, but remember, we stayed above, most importantly, that QQQ or NQ 80.40 level, and at the same time, right about 30.20, that's the level on ES that I said had to go, and we tested it successfully and bounced back. So same story there. We're just wedging higher. Divergences are still intact. No sell signals yet. The trend's higher, and like I said, it's been a slow grind. This line here, the example I'm trying to make is where the trading opportunities lie. I've measured a line here. It's 5%, and you can see this 5% line goes all the way back. The last time we were here, come all the way back to this level right here, and that was in the beginning of the month. That was early October. So we've gained now through the end of the month into November. It took about 3 weeks to gain 5%. Example of more bang for your buck elsewhere. Crude just recently. This is a 60-minute chart of crude. We had first a shorting up right here. I mentioned when we're coming up here, we shorted it at 56.88 with that divergent high. Pulled it down here. That was probably, I didn't measure it out yet, probably a good 7+% drop. And then down here from these trend lines down to this level here, said that's a long scaling buying up down to that 53.79. We had positive bullish divergence, and this line here, that's 5%. This is how much we've gone up in just since, what was that, yesterday? About 5%. So basically in one day, the gains that you made, and it's taken the market nearly a month to make, you made in one day in crude, and that, and that follows again on the heels of a 5% plus drop there. And when you look at ES2, remember, most of this 5% rally since early October was just on the heels of this 6-7% drop. So most of that was just recovering what we dropped. So yes, the market's up, it's at new highs, but again, just slightly above where it was back here at the previous high. So really, again, I'll do these updates, but we don't have sell signals. We have a trend, relatively steady, but just not an impulsive trend, nor is the stock market usually going to go up or down as much as crude or other commodities. So that'll continue to be my focus, and we'll watch these next week to see if we get those sell signals, but the risk reward still appears unfavorable. I don't see any objective long entries here. You want to ride a trend, you ride a trend. Keep your stops below those those sell triggers, and you maybe get a couple more percentage points out of it. Or not. We'll see if it breaks down next week. And to wrap the video up, before I get to, I want to cover Apple. I had a member, the site, ask for an update on Apple. Apple, I threw it out there, is not an official trade because the odds, aren't that high, but an objective trade. This is the S&P, and I'm just showing you here the series of marginal new highs, like I've talked about, followed by corrections. I've recently covered the VIX, which is, of course, let me get to that too, since we have plenty of time here. It's a short video. The VIX still hovering right above that support zone, where each and every correction, all the significant corrections in recent years have started from on tags down to this level. So we're still a hair above it. It'd be nice to see it when you look in closely here. Each and every time we hit the bottom of that, or the top or the bottom of that support zone. Once we came through the top, in other words, that tag there was the first tag of the top of the zone there. This one, like I said, we hit it here. We did have a correction in the stock market. This is just looking at the VIX pretty much in reverse is what the market will look like. And then the big drop came after that extended period of low volatility there, at trading on the support zone into the early October highs in the stock market, followed by that 20-something% drop. So there it is. So we're getting close to what may be a signal, but again, we can either tap it next week, or we're close enough, or we could trade on it for weeks and even months sometimes. So until you get the sell signal with a breakdown or some type of solid candlestick reversal pattern on the indexes, just because you have low volatility doesn't mean the market's going to drop. Like I said, it can hit that level and then you get your corrections, as the last two were, or you can stay there for a while. And then finally, like I said, Apple. Apple was up today, and what it did is it may have what I like to call a channel overthrow. Sometimes you get that on a wedge pattern, bullish or bearish rising wedge pattern if prices overthrow, and sometimes you'll get on a price channel. So I have this price channel here. We pierced it. It's similar to if you guys trade Bollinger Bands, what you look for is a pierce outside, above or below the Bollinger Bands, followed by a move back in, and that's usually a pretty decent sell signal or buy signal, depending if it's an upside or downside pierce. Sometimes you'll get a channel overthrow, but right now you're above it. You'd have to come back down in there. So we'll watch that next week. 60-minute chart, nothing technically has changed. We continue to move up, and you still have the divergence building there. There's a little minor trend line, but probably what stands out the most to me on Apple are these weekly trend lines. This is a weekly chart here, and I'd need to extend the divergence line here, and divergence line here. So we had a divergent high here. This is a common theme here, just like the market. Leading into the October highs, there was a 39% drop. Apple lost nearly half the value. About 40% of its value was wiped out. Doesn't look like much here because I'm using log scaling, but that is the case. There looks a little bigger when you turn off the log scaling, but it was about a 39% drop. And you can see before that, the last time we had a divergent high on the weekly chart was, you got it right here, just before the 34% drop before all was said and done. And then before that, last time on the weekly time frame we had a divergent high was all the way back here in 2012, and that was followed by a 45% drop. So you get the picture. This one just simply is an extension of the previous divergences right there. But what's also interesting is you have two other trend lines here. You have this one. Let me turn off all these levels real quick and draw it. You have a trend line off the early 2016 lows right here that comes into play. Let me click the line tool, and you can see a perfect back test. There's your trend line. We had an impulsive breakdown, back test number 1, back test number 2, we're still below that trend line. And then if I turn these lines back on, you can see that was the white trend line right here. I'm showing you the one off the 2016, early 2016 lows. And then if you go back even farther, you can see we have a blue trend line off the early 2009 lows. This is our primary bull market trend line right here. And you can see the same story. In fact, let me turn off all the levels and I'll draw it out for you. You'll see it a little more clear. And so these things take a long time to play out when you're looking at weekly charts, but that's a trend line. It's a pretty clean trend line. And as you can see, Apple broke down, back tested, and it comes right in with that 2016 trend line as well. That one started right here, but I just want to point out, if you extend that trend line, it comes off the 2009 lows. So nothing even remotely close to a sell signal, particularly with candles, what you might get. Sometimes you get candlestick reversal tops. You had a doji here followed by a big red candle, doji there followed by several red candles, but right now we don't have any sell signals on Apple, but we are back testing, and last time we back tested we had a pretty nice drop, so we'll watch. Again, one to watch for next week. Okay, so that's it. We'll wrap it up here. Keep it short and sweet, and watch us next week. For QQQ traders, I know I cover the futures a lot. Here's that trend line right there on QQQ on the 60-minute chart. Just like the futures, we're still comfortably above trend right now, or close the week that way, but we'll see. Still have the divergences forming right now, negative divergences, but again, you need to see a break at that level, and minor support right there, a gap right there. So we'll see how we open next week and go from there. This has been Randy Finney with Right Side of the Chart. Have a great weekend.